Welcome back to Turning Hard Times into Good Times. I'm your host, Jay Taylor, and I'm really happy to have with me once again Rick Rule. He is the president and CEO of Sprott U.S. Holdings. Rick is well known from his speaking engagements at numerous investment conferences. He, of course, has been on this show a number of times as well. He's also frequently on television, both in the United States and Canada. He is best known for his investment successes in the resource sectors, both with respect to oil and gas as well as mining. And so his recent merger a few years back with Toronto-based Sprott organization makes complete sense in that Sprott is without a doubt the best investment firm in the natural resource space. With people like Michael Oliver, and last week we had Don Cox on this show providing all of the evidence we need to believe that we are in a new bull market for precious metals and commodities, there is no better time than now to welcome Rick Rule to this show, once again to help us become familiar with some of the services that Sprott can provide for listeners to this show. Welcome, Rick. It's really good to have you with me again.
Jay, it's always a pleasure. Thank you for having me on.
It's really good to talk to you and to pick your brain because few people have been more successful than you, I think, in over the years, over long periods of time, in the precious metals, in the commodities space in general. I'd like you to talk a little bit, Rick, about some of the services that Sprott can provide, and thank you very much for inviting me as well as some other newsletter writers to a day up in Sprott's office to learn about your services. And I came away quite excited about the prospects, and that's why I wanted to have you on to talk to my listeners about ways they can benefit in this bull market for commodities. Now, Sprott trades down here in the United States that you can buy in. Investors can buy it under the symbol SPOXF. It trades, recently I saw it trading at about $1.70 in U.S. funds. You can buy it in Canada as well under the symbol SII. But what really impresses me is that, people are really looking for yields these days. It's very difficult to get yields given the manipulation of interest rates by the central banks. And so people are going out on the risk curve looking for, they're just taking on more and more risk, looking for some kind of returns. Well, Sprott is providing something like a 5% yield right now, which is pretty darn good compared to many other places. So, Rick, I'd like to ask you, though, to talk a little bit about Sprott itself, and then I'd like you to talk about some of the products that Sprott provides, especially for our listeners, I think, exchange-listed services. But talk to us a little bit about Sprott itself. What is the business of Sprott, and how are you able to provide such a good yield in a market that hasn't really done all that well yet?
Well, I think it's important to know, first of all, that Sprott we style ourselves as an alternative asset manager. That is, we are money managers for third parties, institutions, and high net worth retail. And our focus isn't on large general securities markets. We manage in excess of $10 billion and have another about $2 billion under administration. And about 90% of that, I think, is in natural resources or precious metals. So really what we are is a natural resources and precious metals oriented asset manager. I think we should note at the beginning of the discussion that the name Sprott is important because the business, the largest shareholder, and by the way, the largest client of Sprott is a guy named Sprott. The person whose name is on the door is the largest client, the largest shareholder, and provides adult supervision. And Eric Sprott, for 30 years, has been synonymous with small cap growth stock picking and natural resource stock picking. He's also been very prominent as a critic of the way governments spend money and the way the financial services business has capitalized itself. So it's important to know that Sprott eats its own cooking, Jay. Mm-hmm. We have a $550 million Canadian market cap, and $300 million of that is in net working capital with no debt. Mm. When we as Sprott talk about the fact that we're concerned about leverage in the financial services community, it's important to note, first of all, that we eat our own cooking. And one of the reasons that we've been able to sustain our dividend is because we have no debt. In fact, we have a lot of cash. Mm-hmm. One of the reasons why we have been able to excel in natural resources over the last 30 years is because most of what we do is natural resources. We specialize. Outside of natural resources, of course, we're also a very large alternative credit provider where we directly underwrite loans to various businesses. And I would say outside of resources, our key core competency is credit and credit analysis, which is my own background. In terms of products, we have a wide variety of products. Your Canadian listeners and subscribers will know us for publicly traded Canadian mutual funds across a variety of alternative asset strategies, most prominently, of course, natural resources. U.S. investors will probably best know us for our physical precious metals trust, the Sprott Physical Gold Trust, the Physical Silver Trust, and the Physical Platinum and Palladium Trust. We administer about $4.5 billion in these New York Stock Exchange traded products. And I can say without qualification, I believe, that these are the finest investment vehicles in the world for U.S. taxpayers who want to be long physical metal without having physical possession. The best, because of their trust structure, a successful investment will be taxed at the capital gains level rate rather than the ordinary income rate, where you would be taxed if you own physical gold or if you own the gold ETF, GLD. Better than the other trusts because our trusts are redeemable. You can, in most circumstances, trade our units for physical metal, which means they trade at large discounts to the underlying net asset values. In addition, as you heard in Toronto, Jay, Sprott offers 2 exchange-traded funds, which trade on the New York Stock Exchange, to international investors. The Sprott Gold Miners Trust, SGDM, and the Sprott Junior Gold Miners Trust, SGDJ. We believe that these, because they're factors rather than market cap weighted exchange-traded funds, are the best investment products available to investors who don't want to do single stock picking, but rather want to participate in the beta for the whole sector. Mm-hmm. A good way to go, because particularly for small stock investors, you don't get yourself involved in what could be liquidity traps and individual issues, things that you and I know a lot about.
Oh, yes.
Having your money spread over 35 or 40 issuers, you also don't have the single company failure risk that other people have. Not as much fun, certainly, as single stock picking and looking for alpha in individual names. But the truth is, when you have a sector as volatile as the mining stock sector, where it can be up 100% in a year, capturing the beta in the trade is important, and that's what the ETFs are designed to do. In addition to that, for U.S. investors, we have a wide variety of retail brokerage services and money management services in the natural resource space, and in particular for accredited investors who want to participate alongside Sprott. It's important to note when I say alongside Sprott, that Sprott and its principals themselves participate in every financing that we generate. We believe that we are the largest private placement organizer in non-U.S. resource securities for U.S. resource investors. In other words, we originate and organize more private equity and debt placements for non-U.S. issuers than any of our competition, and as a consequence have the best product calendar on offer for U.S. retail investors. As a stock, I think we're an interesting speculation. Now understand I'm talking my book.
Yes.
In fact, 40% of Sprott is owned by officers and directors, and 70% of Sprott is fairly closely held. I myself own in excess of 10% of the issued and outstanding shares in the company, and I am an employee. The attractiveness of Sprott, I think, goes first to the brand, the Sprott brand. If you Google Sprott and Google gold, the name association between precious metals and Sprott is extraordinary. What that means is that as we go further into the gold bull market, the ability of Sprott to benefit from the newfound attention in gold and natural resources is very high. And to give you an example of the leverage in that, Jay, at the top of the last bull market, 2010, 2011, Sprott generated almost $300 million in free cash. At the bottom, we generated about $30 million in free cash. That's the sort of earnings leverage available to us in this circumstance. Put even more dramatically, if you look at the bottom of the last bear market, in 2000, Sprott had about $120 million in performance fee generating assets under management. At the top of the last bull market in 2011, we had $5.6 billion. Assets under management increased from $120 million to $5.6 billion.
Wow.
At the bottom of the last bear market, last year in 2015, assets under management declined to about $1.6 billion. I'm not saying that in this bull market, the bull market that we're entering into now, that our assets under management will grow 40-fold the way they did last time. But it wouldn't surprise me to see our performance fee earning assets increase by a factor of 10, which could, I'm not saying it will, but could drive cash flow and hence dividends absolutely crazy. The leverage that you have in a natural resource bull market in Sprott may be unparalleled in terms of your ability to capitalize on a market without having to own the whole market. And by the way, get a 5.5% dividend while you wait.
Yeah, it's and then to realize that the balance sheet is so strong, Rick. So you've got lots of cash to put to work as you start to see some really good opportunities. And I guess you have an eye though on when this bull market is over, because while bull markets in gold bring very large gains on the upside, the downside is very, very painful. I was really privileged to meet up with Paul Wong up there in your office there in Toronto. Paul is Sprott's senior portfolio manager, and he documented the correlation between declining real rates of interest and gold bull markets on the one hand, and on the other hand, how rising real rates of interest correlate with severe bear markets, especially in the gold mining shares. Well, Paul shows that during secular bull markets, gold shares rise by around 500%, probably more than that in the last 3 bull markets. But on the downside, we give back 80% of the value of those shares. So it's very, very painful on the downside. Now, Sprott Inc. has weathered the storm remarkably well as it continued to generate cash flows and in down markets and also to maintain a solid balance sheet and pay out dividends. Nonetheless, I know that you want to know when the exit time is near for gold shares so as to avoid giving back that 80% of your portfolio. You know, when I was in your office, someone asked Paul, how will we know when the real rate of interests are about to rise so that we can start to take our profits from the gold shares? And his answer was very simple. He said, what we need to do is keep an eye on the real global GDP growth, because once the global GDP growth starts to occur, we can probably expect real rates of interest to start to rise and then triggering a bear market in gold shares. So I have to ask you, Rick, are we anywhere near global GDP growth?
I don't think we are. It's an important question for Sprott because although we're known for precious metals, we operate across the whole commodity space, and GDP growth would lead to commodity price increases across the board, which we haven't seen yet. With specific regards to the precious metals markets, I agree with you that we're in the early stages of a bull market. In terms of the timing question, you'll recall Bernard Baruch said the only guy who absolutely bought at the bottom and sold at the top was a liar. I don't think that I'm smart enough to get the whole move. Yeah. But I do believe that what Paul Wong has said with regards to the interplay between gold and, in particular, real interest rates in U.S. 10-year Treasury securities, that there's an absolute correlation. And I think, as I think you do, Jay, that the stage has been set for a gold market for years, but the catalyst that was put in place was zero or negative interest rates on a global basis. Mm-hmm. My own personal belief is that the reckoning with regards to the U.S. Treasury market won't occur for 12 to 18 months. In my own point of view, that is true because European markets are in even more turmoil than North American markets. Mm-hmm. Mm-hmm. And I suspect that as much as €1 trillion of private investment will come out of Europe into the North American markets in the next 18 months. and that paradoxically we will likely see relatively strong U.S. dollar simultaneously occurring with relatively strong gold prices, which we've only seen twice before in my career, late 1975 and 2002. In both cases, the dollar eventually rolled over in the interim, and the gold price did extremely well. Past doesn't need to be prologue, but I think that the catalyst for higher gold prices has already been put in with these zero and, in fact, negative real interest rates on a global basis. When the top will occur, I think is very much a function of when or if the global economy becomes strong enough that you see an actual positive real interest yield.
Mm-hmm. Yeah, and that's it's hard for me to see that. You're suggesting 12 to 18 months in terms of the U.S. Treasury market, perhaps, because it will still be seen as, the dollar will be seen as a flight to safety along with gold, perhaps, and so both can rise, and we've seen some of that happening recently. I mean, the dollar has been pretty strong. Gold hasn't really gotten whacked. It's been behaving pretty well, I would say.
Correct. The Treasury yield now is, 1.5? Means it's substantially higher than the euro. And the political and economic problems, our presidential race notwithstanding, in North America relative to Europe means that North America is seen as a relatively decent risk-off trade. Doug Casey likes to say, I think the prettiest mare at the slaughterhouse describes the U.S. Treasury market. That may be a little gloomy, but I think ironically we're in for a period where the Treasury market, the 10-year Treasury market, is relatively strong, and the gold market is simultaneously relatively strong.
Well, I remember it very well, the 1970s, Rick, for sure, when interest rates were certainly rising, but that didn't stop the gold price because the real interest rates were even falling. So, it's inflation picking up, and there seems to be a little bit of that even now, possibly. And yet they can't seem to bring themselves to increasing interest rates in any meaningful sense because the stock market, as David Stockman likes to say, throws a hissy fit every time they do it. So it looks like we have a long time to run here, Rick. At least a few years, possibly at least a couple, 2-3 years to start with. But we want to watch it on an ongoing basis. So I hope we can have you back again to talk about it from time to time. You or some of your other fine people. We do hope to have Paul Wong on the show. He's agreed to come on sometime in the near future. His insights. He's a brilliant trader. Has been around for quite a few years. Really appreciated meeting him and all the other folks that you had up there at Sprott. Thank you very much, Rick, for the invitation, and also thanks for coming on the show, and we'll look to do it again sometime soon, I hope.
Always a pleasure, Jay. I think I'm going to be seeing you in New Orleans. Is that correct?
I'm not scheduled yet, but I guess I should try to make the trip once. I really should get down there. Yeah,
absolutely. I look forward to seeing you somewhere sometime. We can compare notes again.
Okay. Thank you very much, Rick.